The national debt crisis is about to explode. We've known for years that the national debt is out of control, but this issue is worse than most people even realize. Right now, the national debt totals over 34 trillion and counting. Maybe even by the time you're watching this, it'll already be at 35 trillion. Unbelievable. A lot of Americans don't think national debt is a big deal. They probably don't even understand it. After all, we've been chugging along for decades with mounting debt, and some people make the argument, who owns the national debt anyway? Don't we technically owe it to ourselves? So actually, let's talk about this. There are two different kinds of national debt. Intergovernmental, which is held by the Federal Reserve, and public debt, which is owned by private investor institutions. U.S. savings bonds, other foreign governments like China owns a lot of American debt. So does Japan. While intergovernmental debt does make up the largest portion of national debt, the next largest portion is owed to other governments. About 30% or 8 trillion of the national debt is owed to foreign nations. Japan holds the most U.S. debt, followed closely by China. Here's why this public debt poses more of a problem now than ever. Historically, the U.S. would pay off its old debt by issuing new debt or treasury securities. This strategy works great as long as there's a market for treasury securities, but when other countries realize that the U.S. dollar is not what it used to be, you don't have that market anymore. That's a problem. And we've talked about here on this show, the US dollar is slowly losing its position as the primary reserve currency of the world. That is why the United States government is launching so many wars right now. That's why they're so invested in sending billions to Ukraine, because the rise of Russia and China as a collaborative nation state with the BRICS currency is a total affront to the US dollar. Follow the money. We don't care about Ukraine. We don't care about the Ukrainian people at all. They pretend they do. What they really care about is money. More and more countries are starting to seek independence and autonomy from the US dollar. So between the skyrocketing national debt and the dollar's weakening position on a global level, we could be seeing big challenges ahead for the United States. For more information on this, be sure to check out my video that I did on the decline of the US dollar. We'll link it up right here in a card. You can watch it a little bit later. But as more and more countries are distancing themselves from the dollar, U.S. Treasury securities are less appealing. The decentralization of the dollar is already underway. Central banks hold less in Treasury securities today than ever before, which could mean trouble for the national debt problem. America's debt grows by 1 trillion every 100 days. And economists warn that this rate is unsustainable. And you don't even have to be an economist to see that. How is that possible? If you ran your business like that, you'd be out of business, bankrupt or otherwise, right? And much like we're seeing on the consumer side, the interest rates are just debilitating. The United States is projected to spend about $870 billion in interest payments alone in 2024 on the debt. Some projections have it hitting $1 trillion just in the interest payment alone on that debt by the end of the year, which is more than we spent on the Department of Defense. Yes, the Pentagon, and our national security, and Social Security. So what can be done? It's not possible for the United States to pay back all of this debt. It's impossible, actually. And we certainly can't default on it without wreaking major havoc on the global economy. We'll get back to that video in a minute. But first, inflation is out of control, and you've got to protect your money. Any money you've got sitting in your bank is losing value every day right now by around 3.5% to 4%. And if you want to protect your money and grow it, you need to put it to work by investing it. Now, I'm not talking about risky or volatile investments like stocks or crypto, which I like, by the way, but tangible assets that you can actually put your hands on, okay? And the best tangible asset that you can invest in right now is real estate. It's the #1 hedge against inflation, and it offers some of the safest and highest returns. I'm Clayton Morris, longtime real estate investor and founder of Morris Invest. Now, I got into real estate after learning that it was a favorite among the wealthy. And now I know exactly why. Personal experience has proven that it is the #1 way to build and protect your wealth. I'm here to tell you that, folks. Now, while there are several ways you can invest in real estate, most of which I've tried myself, the build-to-rent model offers the most benefits by far. We're talking new construction, single-family buy and hold real estate. Build-to-rent properties. They offer more tax benefits, fewer headaches than rehabbing an existing property. There's less risk. There's way less risk than flipping houses. And they're a lot less work than wholesaling houses. And they're less turnover and fewer issues than multifamily houses. When you invest in build-to-rent real estate, you're getting 4 streams of income: appreciation and equity gains, principal reduction in the mortgage, tax benefits, depreciation, and monthly cash flow, my favorite. Now, on top of that, you're using someone else's money, the banks, to invest, while someone else, your tenant, is paying for it. That's just one advantage it has over other tangible assets like gold and silver. You can't buy gold with the bank's money and have someone else pay for it, can you? No, you can't. Plus, when you're strategic about leveraging, you get 4 to 5 times the assets you can invest in. And it's the only investment that gives you 4 to 5 times protection from inflation. My company, Morris Invest, along with the help from our team at Sedera Wealth, helps you invest in build-to-rent properties as easily as investing in stocks. Because we buy and we build in bulk, and then we pass our savings on to you. Makes it a lot simpler when we're building 40 properties at one time. We're able to buy 40 furnaces, 40 water heaters, and be able to pass that savings on to you. Now, we offer free phone calls to create a personalized investing plan. But before we agree to talk to you on the phone, there's just one thing you need to figure out. There's one number that you need to calculate before we'll even talk with you on the phone. It's your freedom number. Your freedom number is the amount that you need to fully replace your current income, but it involves more than your monthly budget. My wife Natalie and I created the Freedom Number cheat sheet after a brush with job insecurity and realized that we were tired of depending on our paychecks just to get by. And then we achieved financial freedom and now make more than we did at our jobs through the monthly income that we get from our rentals. Now, we'd love to show you how to do the very same thing. Now, I made a quick worksheet that walks you through the process of finding your freedom number, which you can download for free at the link below. And I'm also going to send you valuable content that shows you how to identify a smart investment, what it takes to become a successful real estate investor, what you need to get started, and where to get a strategy that best fits your goals and situation, and how to get free ongoing help. I'm going to send all of that to you, okay? So click the link below to get your freedom cheat sheet right now and start protecting your money today. Many major budget analysts posit that a combination of spending cuts, tax hikes, cutting back on programs like Social Security could help, but we all know that no one in Washington is looking to dial back spending or propose tax hikes that could compromise an election. So in this political climate, it seems like the only option is to print more money, further devaluing the US dollar. If you haven't seen my video on the collapse of the US dollar, be sure to click it right here, and please subscribe to this channel so you can elevate your financial intelligence. And we'll see you next time, everyone.